All right, welcome to TalkTickers. Today, we're doing our deep dive into Napatech's Q1 2025 results. We've gone through their interim management statement, listened to the earnings call, and our goal here is really to pull out the key stuff, understand the numbers behind the strategy, and how they're framing their place in this fast-changing data center market.
Absolutely. And what's really interesting with Napatech right now as well, it's this big strategic shift they're in the middle of. You look at the Q1 numbers, they tell part of the story. But management's focus is clearly looking ahead, positioning for what they see coming with AI, cloud, 5G. It's a huge potential shift.
Exactly. So let's kick off with that Q1 snapshot. Top line.
Okay, so revenue was $3.44 million US.
Which is up, 8% compared to Q1 last year?
Yeah. And in Danish kroner, that's 23.8 million, so up 11%. And gross margin looks pretty solid, still strong at 70.3%.
Okay, good margin. But then the bottom line figures, they definitely show that investment phase you mentioned.
Right. EBITDA was negative 29.1 million DKK. EBIT negative 35.5 million DKK.
And free cash flow.
Also showing that outflow. Negative 29.4 million DKK used in the quarter.
Right. And reflecting that burn, they also announced a capital increase plan, didn't they? Minimum 150 million and okay.
They did. And importantly, they mentioned that pre-commitments are already over that minimum threshold.
Okay.
Yeah.
So yeah, the current numbers show a need for cash, definitely. But the story from management was very much, we're investing now for what's coming.
Well,
pointing to, signs of market improvement ahead.
Exactly. I mean, the negative numbers aren't really a shock given the strategy pivot they've been talking about. The real question is, how well is that investment setting them up? Is it going to pay off?
Let's dig into that a bit, those financial details. Costs were up, right? Staff and other external costs went from about 40.6 million DKK last year to 48.9 million this Q1. Management tied that directly to R&D, strategic investments. Does that track with their plan?
It does. Yeah, they've been saying they needed to ramp up R&D spend to build out the tech for this mass market they're targeting. So that cost increase fits the narrative they've laid out.
Okay. Now, they did flag a challenge with working capital, high inventory levels specifically. What's the story there?
Well, that inventory buildup, it seems to stem from sourcing decisions made back in 2022. Basically, they ordered parts expecting certain sales volumes, in 2023, 2024 that didn't quite hit those initial, maybe more aggressive forecasts.
So they got caught with too much stock. How are they fixing that?
The big change is in manufacturing. They're implementing a pretty significant shift.
Okay, tell me about that.
So for their older kind of niche business, lower volume, they used a build-to-stock approach.
Right. Make it and hope someone buys it.
Pretty much. Now, for the new stuff, the high growth potential business, they're moving to build-to-order.
Smart.
Yeah, so they won't build it until they have a confirmed order. Should really help avoid tying up cash and inventory they don't need immediately. And they're also working on payment terms, with suppliers, customers, trying to optimize that whole cycle.
Makes sense. Does build to order mean customers wait longer, though? What's the lead time?
They said it's actually pretty reasonable, typically just 1 to 2 months for production lead time on build to order.
Okay, that's not bad at all. So that should help manage inventory and cash flow as hopefully volumes ramp up.
That's the idea, yeah. Improve that working capital efficiency.
All right. And cash position at the end of Q1, where do they stand?
Cash and equivalents were at 34.6 million DKK. They also mentioned their credit facilities arrangements with banks in Denmark and the US, plus a Danish public fund guarantee.
Okay.
Though, one point there, about 10 to 15 million DKK of the facility tied to that public fund guarantee, that's going to be adjusted down later this year. Something about changes in EU regulations affecting the guarantee.
Okay. So 34.6 million cash. Compared to the burn rate, it really underlines why that capital raise is, essential.
Absolutely critical.
Did they sound confident that this raise would be enough? That it's the last one they'll need for a while?
They did express confidence, yes. Said they expect this announced raise to be the last one needed to execute the plan and reach, self-sufficiency.
Okay. Let's shift from the pure financials then to the actual business strategy. Management seemed pretty positive, saying execution is on track, maybe even ahead in some spots. What's the cornerstone of this whole strategic push?
It really comes down to the partnership with Intel Altera. They described it as basically central to their whole transformation into this mass market for advanced NSE's network interface cards.
Right.
And they broke down why it's so important into 4 key benefits.
Okay, what's benefit number 1? Sounds like it's about volume potential.
Exactly. Scale. Think about it. Napatech's old niche markets meant maybe 5,000 units a year total.
Right. Small potatoes in the grand scheme.
Tiny compared to this. With Intel Altera, they're targeting the mass market, where just one data center could potentially need anywhere from 1,000 units, up to maybe 50,000 or more per year.
Wow. That's a completely different ballgame. Huge step up in potential volume.
Transformative is the word they used. Okay, second benefit. Reach.
Meaning getting their product in front of more customers.
Exactly. Napatech's a smaller company. Their own sales team can only cover so much ground. This partnership basically plugs them into Intel Altera's massive global sales force and marketing machine.
So Intel Altera becomes their channel to market, essentially.
Reach part of it, yeah. Gets them into conversations, onto radars they just wouldn't reach on their own. Opens up a ton of doors into that mass market.
Okay, makes sense. Benefit 3.
First mover advantage. Through the partnership, Napatech gets early looks, early access to Intel Altera's newest CPU and FPGA tech.
The core components for these advanced indices.
Right. So they can build their solutions using the latest stuff, potentially ahead of competitors trying to do something similar.
That's a serious edge if you're first with the new tech. And the fourth benefit.
De-risking the roadmap. They get a lot of engineering collaboration with Intel, guidance based on Intel's hardware and software, which is already, battle-tested in those huge hyperscale data centers.
So they're not starting from scratch. They're building on something proven.
Precisely. Reduces the technical risk significantly.
Okay, that partnership really does sound fundamental to their whole play here. And speaking of playing and winning, what about recent design wins? They talked about those on the call. Let's start with that big one, the global tier 1 server manufacturer.
Yeah, the update there was pretty positive. The product, their 400 gig advanced NIC, the N370X Smart NIC.
Which can also be configured as an IPU, right? An infrastructure processing unit.
Correct. That dedicated processor for network security storage tasks. So that product was delivered to the tier 1 ahead of schedule, and it was accepted.
Good start.
But the bigger news, really, is that what started as one project has now apparently expanded. They're talking about 6 different use cases across 6 separate business units within that one tier 1 company.
6. Wow. What kind of areas?
Spanning things like AI, cloud storage, data reduction tech, cloud tenant services, even 5G mobile infrastructure.
So going from one initial project to 6 across different parts of a huge tier 1, that feels like strong validation, right? Shows the product has legs within a major potential customer.
It definitely suggests it's resonating, yeah. Showing value in different applications for a really key target.
And then there was the other big one, recently disclosed, Datrix, the AI inferencing company. That sounds very timely.
Hugely relevant win. And what's really notable here is that Datrix chose the exact same N370X Smart Tennessee platform, the one developed for the tier 1.
So that's like third-party validation of the core product itself.
Exactly. Powerful validation. And this win is slap bang in the middle of the high-growth AI space, specifically inferencing. The potential volume here is substantial. Management threw out a number, potentially 25,000 units or more per year once it ramps to peak production.
25,000 plus.
Yeah.
Just from Datrix. That's a serious number compared to where they were.
Massive. And the deal structure sounds solid, too. There's a master supply agreement locking things in for 5 years, product availability of volume commitments, and it also included an NRE fee.
Non-recurring engineering. So Datrix paid them for some custom software work.
Seems so, which points to, a longer-term partnership and also highlights Napatech's software capabilities on top of that Intel hardware. It's not just selling a card.
Okay. Any other wins mentioned? Maybe smaller ones, but still important.
Yeah, they touched on a few others that show the breadth of application. Broadcom Semantek, using it for cybersecurity, data loss prevention, and they claimed some really dramatic performance boosts there, like 2x up to maybe 58x faster.
Then Identicom for critical infrastructure. And that one apparently ties back to one of the opportunities with that tier 1 server maker we talked about.
Oh, okay. Interconnected.
And also Solera, using it for AI and financial services. High frequency trading where, ultra low latency is everything.
Right. So these wins show versatility. But if you add up the potential volume drivers, the big ones like the tier 1 expansion and Datrix, what's the total potential annual volume from wins they've already announced?
Management put a number on that. They said the total accumulated annual volume, looking at peak production scenarios for all the announced wins so far, is in the range of 70,000 to 80,000 units per year.
70 to 80,000. And that's based on deals already signed.
That's what they stated, yes.
Yeah.
The potential peak volume from known secured opportunities, which is, as you said, a massive, massive potential leap from their historical business.
Okay. Let's zoom out then. Put this in context. Why is this whole market for advanced data center networking suddenly such a hot topic? What's driving this demand? It's really the convergence of these massive trends, right? You've got AI everywhere, cloud services just keep expanding, and then the whole 5G mobile rollout. All these things are fundamentally changing the demands inside data centers. They need networks that are incredibly fast, have super low latency, and are dynamic, adaptable on the fly.
And the old way of doing networking just can't keep up.
Not really. Basic network cards, the traditional ones, they're kind of becoming bottlenecks. They force the main server CPU to handle all the networking, security, storage stuff.
Which eats up CPU cycles needed for the actual applications.
Exactly. It suffocates the CPU. Plus, they're not programmable, so they're rigid. There was research mentioned suggesting like up to 80% of server capacity can be wasted if you don't have proper networking offload.
80%. Okay. So advanced NICs are the fix.
That's the pitch. They offload all those infrastructure tasks, network processing, security functions, storage acceleration away from the main CPU.
Freeing up the CPU to do its real job.
Precisely. Which means much better performance and efficiency for those demanding AI, cloud, and 5G workloads. And because they're programmable, operators can tweak them, adapt them as needed. End result: lower power use, less space, less cooling needed. Basically, lower cost per unit of compute.
Okay, the why is clear. But the big players, the hyperscalers, Google, Amazon, Microsoft, Meta, aren't they just building their own custom versions of these things?
They absolutely are, and they have been for years. They hit these scaling problems first, right? And they had the deep pockets, the massive engineering teams, to design and build their own bespoke advanced NICs. They deployed something like 12 million of these custom units just last year. And often, companies like Intel Altera were supplying key components for those custom builds.
Okay. But then there's everyone else who can't do that.
Exactly. That's the mass market. Think large enterprises, the big telcos, the tier 2 cloud providers. They face the exact same network headaches as the hyperscalers.
Need the speed, the low latency, the programmability.
All of it. But they don't have the billions for R&D or the specialized teams to build custom silicon. They need off-the-shelf solutions. Merchant, turnkey, advanced NICs.
And that's the sweet spot Napatech is aiming for with Intel Altera, the greenfield opportunity.
That's precisely it. Intel Altera provides the core tech, proven at hyperscale. Napatech, through the partnership, packages it into a complete, ready-to-go merchant solution for this mass market segment that needs the capability but can't build it internally. They're positioning themselves as the go-to supplier for those IT buyers.
And how big is this market opportunity in dollar terms or units?
The call mentioned forecasts point to over 20 million servers a year needing advanced NICs by 2029. The hyperscaler market itself is huge, maybe $11 billion over the next 5 years.
Right.
But the mass market Napatech's target, that's seen as the big growth area, projected to hit maybe $6 billion by 2029 and expected to be the fastest growing piece of the pie. There was even a suggestion that some hyperscaler demand might shift to merchant solutions over time as they mature.
Okay, so the strategy seems clear. Use the Intel Altera partnership and tech, proven by hyperscalers, to deliver a merchant solution for the fast-growing, underserved mass market.
That's the core story they presented on the call, yeah. Capture the demand from everyone who needs the tech but can't build it themselves.
All right. So based on all this, the strategy, the wins, the market, what did they actually say about guidance, near term and looking further out?
For Q2, they just reiterated their existing guidance, trending towards a pretty strong year-over-year revenue increase, like 40–50%.
Okay. And longer term, say 2026, 2027.
The core expectation they laid out is doubling unit sales in 2026, and then seeing further significant growth in 2027.
That's tied directly to these big design wins ramping up. Datrix, the tier 1.
Explicitly, yes. That projected growth hinges on those announced wins hitting their expected production stride.
What about costs? OpEx.
Ugh.
If volume doubles, do costs double?
That was a key point they made. They actually expect OpEx to remain pretty stable, flat at 2025 levels for the next couple of years.
Really?
Their reasoning was basically, we've done the heavy lifting on developing the flagship 400 gig product. It's delivered to Intel Altera, delivered to the tier 1. They feel their current engineering team is sufficient for the roadmap they have now and to support the ramp from customers like Datrix who are using the existing product.
So no big new R&D push needed immediately?
Not unless new projects come along with NRE fees attached, that would cover any extra OpEx. That was the qualifier.
Okay, stable costs while unit volumes hopefully explode.
Yeah.
That's a recipe for potential operating leverage, right?
That's the financial model they're pointing towards, yes. And on the working capital front,
They expect that to improve too, even with more units.
yeah, they reiterated the goal is to actually reduce the working capital needed while increasing unit volume. That's where the shift to build to order and optimizing payment terms really needs to deliver better cash efficiency as sales grow.
Got it. And finally, back to that capital raise. They sounded pretty definitive about it being the last one.
They did. Management expressed confidence that this raise should be enough to fund the plan through to profitability and, standing on their own feet financially.
Okay. So let's try and wrap this up for you listening. How do we tie all these threads together? What are the main takeaways from digging into this earnings call summary?
Well, I think the main story is that this pivot Napatech is making. You see the Q1 financials, right? The losses, the cash burn that shows the investment phase they're in.
Mm-hmm. Heavy investment.
But offsetting that, management laid out what they see as strong strategic progress. And they backed it up with these big design wins, Datrix, the Tier 1 expansion. Those are concrete signs their tech is landing in that critical mass market. And those wins are what underpin their whole growth forecast.
And that Intel Altera partnership isn't just a name drop. It's framed as the absolute engine making this mass market strategy possible and, importantly, less risky.
Totally. It seems absolutely central to their ability to even play in this league, let alone execute at scale. The call positions it as their key weapon for cracking that mass market.
So the picture today is burning cash, need the capital raise.
Yep.
But management says that's the necessary price to pay right now.
Exactly. They frame it as, look, this is the investment required to fund the transition to capture this massive future growth we see coming, growth that they argue is now starting to be validated by these key customer wins.
So if you're tracking Napatech, what are the absolute must-watch items over the next, say, year or two?
Number one has to be the ramp up of those announced wins. Do those potential unit volumes, that 70-80K peak number, actually start turning into real shipments and revenue? That's critical.
Execution on the wins. Got it. What else?
Progress on working capital. Can they actually bring down that inventory, improve the payment cycles like they plan? Need to see that efficiency improve.
Okay. Then third.
OpEx control. Can they really hold operating expenses relatively flat even as volumes, hopefully, start to ramp significantly? Delivering on that promise of operating leverage is key.
Wins ramp, working capital improves. OpEx stays stable. Those are the big milestones.
Pretty much sums it up.
All right. Now let's shift gears slightly. Time for our segment based only on the information discussed here from this earnings call summary. And let me stress, this is absolutely not financial advice. It's purely a hypothetical thought experiment.
Strictly based on what management presented on the call, a what-if scenario.
Exactly. So here's a potential wild yet plausible trade idea built solely on this summary. You could consider going long Napatech shares. Why? You're essentially making a high-stakes bet on execution. You're betting that management delivers on that anticipated volume ramp from Datrix in the Tier 1, starting in 2026, accelerating in 2027.
Betting that 70-80K peak potential from already announced wins actually materializes.
Right, and you're betting that their forecasts of stable OpEx and improving working capital also prove accurate as that volume comes online. The thesis is that this combination leads to a dramatic turnaround from the current cash burn to significant profitability and positive cash flow.
It assumes the mass market really takes off like they predict. And that Napatech, powered by Intel Altera, successfully captures a big chunk of it and holds off competitors.
It's a bet purely on their execution roadmap and market timing, using the potential volume from confirmed wins as your baseline. Again, based only on this call summary.
It definitely hinges on a lot of ifs becoming reality. Management converting wins to revenue, the market developing as forecast.
Precisely. So bringing this deep dive to a close then, Napatech's Q1 showed the financial cost of their strategic investment. Top line growth, yes, but bottom line losses. But the narrative from the call was one of strategic progress, major design wins validating their approach with Intel Altera, and a clear path outlined towards significant future growth funded by this upcoming capital raise.
And it's crucial to remember this discussion was purely an analysis of the information in the earnings call summary. It is not in any way, shape, or form financial advice.
Absolutely. Investing in Napatech, like any stock, carries significant risk. You should always consult the company's full official earnings materials, do your own extensive research and due diligence before ever considering making any investment decision.
And maybe one last thought to leave you with. Think about that mass market customer Napatech is targeting. Beyond just the tech specs, the speeds and feeds, what are those other maybe less tangible things, like the level of support, how easy it is to integrate, the strength of the relationship that would push a large enterprise or a telco to choose a merchant solution like Napatech's over trying to figure it out themselves? Something to chew on.